Hey everybody, what's up? It's Pete. Welcome to today's Best Stock Picks. We're going to be creating a game plan for Thursday, April 23rd, 2020. Kind of a strange day in the market today. If you happen to be day trading today, the morning especially was incredibly frustrating, which is actually one point that I want to make of how to shift, make a decision on what kind of stocks you would trade. As far as, would you stick to your normal group of stocks? Would you start to venture out to look for scans of different stocks and how you would ultimately trade those different kind of stocks? If you find these videos helpful, it would mean the world to me if you can click down in the corner and subscribe. Also, if you have any questions, comments, or challenges that you'd like for me to help look at in a future video, like Corey did today, sent me an email, I'll be more than happy to cover that as soon as I can. We're going to first get into, obviously we have jobless claims tomorrow. They're expecting, when I say tomorrow, I mean Thursday, the 23rd, expecting another 4.5 million jobless claims to be put out there. Now, the question is, has the pause in the market for the last 10 days priced all of this in, and are we getting ready to see the next move higher? Kind of tough to decide right now. Coming into the week, we actually forecast by reading the tape saying we expected profit taking this week. We expected the market to pull back this week, and that's pretty much what we've gotten. The challenge that we're experiencing right now, you can see, we'll take a look at it on the daily chart. We've had a lot of sideways price action, a lot of what I call melted candles, which are also indecision type candles, where the body of the open and the close are basically in the same place. So that means nothing new has happened. Now, digging a little bit deeper, we'd be able to forecast the next move by reading the tape, by looking at the volume with that sideways price action. And right now, the volume is kind of slow, dried up, nothing out of the usual, nothing abnormal on the long side or the short side in the ETFs. Normally, if we're going sideways and we saw very light volume, as we're seeing right now, we would anticipate price action continuing to the upside. But we have this headwinds behind everything now, where earnings reports, as expected, have not been great, and the going forward guidance is not good either, at least from what we've seen so far. Netflix, you literally used the word temporary yesterday to determine the best way to word their increase in subscriber base, which is obvious. Everybody's home right now, and Netflix binging like crazy. I know I am. If you haven't watched Ozark, watch it. It's intense. So anyway, we're going to get into some tape reading today. We have nothing. Ironically, this is the point that I want to make. We don't have any new stocks that look great on the short side. Maybe some banks, Wells Fargo, JP Morgan. Every time it seems to rally, it's getting some selling pressure. There are a few airlines that are actually trading at or near 52-week lows, and specifically lows heading into where we've been kind of basing in that sector since everything hit in the world. But I do want to address Corey's question prior to us getting into the market analysis and getting into which of these are the best stock picks for tomorrow. Gold stocks, by the way, if you don't want to watch to the end, some gold stocks. I think we have 4 of them that we're going to mention today. A couple of tech stocks that we like, and credit card processing stocks. But the list is not huge, and that's a big part of trading. Right now, with the market going sideways, it's incredibly important to make a decision. Do I want to be patient and wait for the indices to pick a direction? And I'll show you what I mean by that in a second. Do I want to be patient and wait for the indices to pick a direction? Do I go out and scan other stocks that are relatively strong, relatively weak, and trending over the short period of time, which are stocks you might not normally trade? Or do you just sit back and try and be like a sniper and trade some shorter term movement? Very different scenarios, and really the right answer, again, I don't know anybody who's watching the videos. Obviously, I appreciate it, but I don't know you personally. The way that I do it, the way that I've done it always over the years, I tend to really get a grip on what is the market doing, what is the big picture analysis, what is the big picture tape going on, how is the mass of money doing something? Is it obvious is the first question I want. Is the market obvious? Right now, it's not. So I'm dialing back my share size and my expectation for follow through on positions, whether it's a day trade or a swing trade. Either way, I'm pulling back and I'm exiting into momentum, or using a slower moving average to trail profits if we happen to be getting spikes back and forth. So I'm decreasing my share size until the market picks a direction. And If I'm using scanners, which I am during the day right now because it's required, the overall market is not really that conducive to just looking at a smaller basket of stocks. The scanners are definitely pulling up ideas, but some of the stocks, although they meet the criteria, they're not something that I trade in on a day in and day out basis. So again, I'm reducing my exposure. So my overall game plan right now with the current tape that we're in, I can absolutely take advantage of stocks that are reading perfectly as far as criteria is concerned, but I'm not trading bigger and I'm not holding longer because I don't have a good feel on the market. And it doesn't matter which market you're looking at right now, other than maybe gold and oil. Let's make sure I put that into the equation. So I want to get to Corey's question, which was, what can you reasonably expect the next day in a stock that moves 32% in one day? And actually, the stock we're going to take a look at actually moved 36% for the final number. So we might have sent that email over, probably sent it over in while the market was still open. So Corey, the answer is basically, we're talking about Snap. We're actually going to go to the charts right now. We're talking about Snap, and you can see here it actually gapped higher earnings yesterday and continued, right? So you can see over here up 36.7%. Now, obviously, a stock is not going to move that much on a normal basis. So remember, Corey and everybody else, what we do as traders is we trade for what normally happens. And that includes profit potential, that includes booking profits, that includes when do we move up trailing stops to hold winning trades, but trail them. We don't want to get out of them while they're still moving in our favor, but we do want to move it up to a point where we're going to lock in a certain amount of profits. And if you didn't do that, if you watched the video in Shopify, we'll go to that chart in a second. We made it very clear 2 days in a row, exhaustion volume, expect profit taking, and hopefully you move those profit stop losses up higher. It had a massive, massive, I think it was $80 swing in the other direction. We'll take a look at the chart though to get the difference. But Snap is a little bit different because this is only the first day out of this move. So what can we reasonably expect is the question. Well, what I have on the bottom here is something I normally don't have on the screen. I just happen to know the numbers. Going into yesterday, the average true range, which is the average of stock of Snap would trade from low to high. That's what the average true range is over the previous 14 days, was 78 cents. So a normal day from low to high in Snap was 78 cents. Today, obviously, had a much, much bigger move from here to here, the gap itself, but the average true range, the trading range in Snap today was from 17, excuse me, not 17. The low was 1485 up to 1715. So a much bigger trading range today, and the average daily range expanded from 78 cents to $1.05. So Corey, obviously we're not anticipating another 36, almost 37% move. But the question is in the context of how do I trade it tomorrow? What can I reasonably expect out of the stock today? Well, let's assume the stock opens flat. So in other words, it closed today at $17, $17.01. Let's assume it opened flat. Give or take just a little bit. Opening flat, doesn't open lower, doesn't gap again. Reasonably, we can expect what the stock normally does is to trade at least $1, $1.08 from what it normally does. Now, we might get a little bit more of the juice out of that, maybe more buying attention because of today's gap, today's bigger volume and trade. But let's say it opens flat. That means the target for tomorrow and Friday, assuming 2 bullish days where they're well bid and continue, we'd have another $2, and let's just say $2.20 worth of profit. So we can reasonably expect the next 2 days, based on what the stock normally does, would be to trade up to $19 or just above $19. Now, that's what it would normally do. Could it possibly go further than that? Yes, it absolutely could, based on the excitement over the stock right now and the earnings. So as the volatility of the individual stock and the attention the stock is getting, it could go a little further. But if it opens higher, pushes higher, opens higher, and pushes higher, that 19 and change is what it normally would do. If it gets up into that level, you would start to trail up your stop loss into the weekend, assuming you didn't want to carry it over the weekend if it's a shorter term swing trade. If it's a longer term trade, you just had a pretty big move. The stock just basically went from $12.50 to $17 in 2 days. Probably going to end up consolidating that over the next couple of days, and then look for the next bigger move, because now the guidance was good as opposed to what we saw in Netflix where the guidance was not great. You would expect that to pause and then follow the weekly charts up for longer plays. So that's essentially, Corey, what I'd be looking for tomorrow. And this will be in my list tomorrow. So thank you so much for calling it out. We will actually end up making sure tomorrow, if I want to be long, it would be a buy stop for me personally above the previous day's high, which is in the 17 area. I'd probably have it around 17.25 to make sure it actually pushed up there. I would stay long unless the stock came back in and closed back into today's trading range. If it went well bid on the daily charts and continued to go, the $19 area would be the spot where I'd be looking to really tighten up and move up my trailing stop. So really, really good question there, Corey, as far as what we would do in a stock that explodes like that. So I'm going to remove the average true range. I just wanted to have it in there as an example. A lot of interesting stuff going on in the weekly chart of the SPY, because right now, technically, we actually are at an inside candlestick. So we're actually getting the exact price action we came into the weekend looking for. If you want to go back to that video, you can take a look. It was over the coming into today, coming into Monday. It's already Wednesday night, looking for Thursday. So you can see clearly we have a pause. So I got a really good question now in a coaching call today. That what am I looking for next? What would you anticipate happening next? And really, it comes down to this: lighter volume pauses, you should expect them to follow through. That's the technical tape reading. That's what should happen. Consolidations now are happening on lighter volume. Again, I would anticipate it. We don't have any 20-day lows. I would anticipate us following through to the long side. Here's the scenario now, and I want to be clear on this because it's so easy to misquote by only hearing one thing. The game plan for a consolidation like this is if we break out to the upside and we start to trade back above the weekly opening price, which in this case for the SPY, just to give you some tape reading examples, the opening price is 282.61. So if we get back above that level in the SPY, I'll give you that number again, 282.61. That means the week would turn positive again, but it's still an inside candlestick. We would have to get aggressive if we take out last week's high, and that level would end up be, and that level would be 287.30. So I came back to this. I'll go back to the chart. I want to show you in a second. But here's the point. And this is why I came back to this. The whole point of this is having if-then scenarios and an aggression level, a confidence level, a conviction level of one direction or the other. The problem that we're having right now is that we are gapping higher, and a lot of these stocks are pulling back, and they're not short sales. They're strong stocks based on the last 4 weeks worth of price action. And if you want to short it, you're basically just trading on the most recent price action, which is maybe 1 or 2 or 3 days worth of price action. So you have 3 or 4 weeks worth of historic pushes to the upside and 2 days of selling. I was kind of making fun of it in this morning's video when I did stocks for breakfast, saying they're talking about the markets getting crushed. It's 2 days versus 4 weeks, which is more important? The 4 weeks, right? So if you want to have conviction level, how much money was put to the test in the market with real dollars to create the charts that you're looking at? Long-winded, here's what the point is. If we break out to the upside, we could have more conviction because we're following through on the previous 4 weeks. You could hold longer, more positions, and get maybe a little bit more share size if your stocks are breaking out and you have room to go. If we break out to the downside and the week becomes well offered, we're now trading 2 weeks versus a price action where this week is below last week and we're trading this week below the open. You can go over to your list and trade stocks that were weak already, some of the banks, a few tech stocks, and short those stocks first. If you want to short sell stocks short term, let's say Microsoft had a really big trend day to the downside yesterday, but the stock is really strong to the upside, I don't recommend it, first of all, for a day trade or a swing trade because you're fighting the most recent price action. But if you do have some stocks that are already weak, which is not a big list of them right now, maybe some banks and airlines right now, maybe some oil stocks, you would trade those a little bit more aggressively, but with that in mind, you're still fighting the bigger picture of the tape. So the point is 2 different scenarios depending on where the market comes out of this consolidation. So very important. Now, the other side of the equation is if the market is sideways, then you would go to a scanner, and I'll show you what that means right now. We'll just go back right into the charts, and we will pull up the scanner. So this is essentially the scanner that I have during the day, and I've talked about this before. If the market breaks to the downside and we go well offered, I'll be looking for stocks that meet my personal criteria that are changed from the open negative, change from the close negative, and then go to the charts. So for example, again, I have no idea if the stock is strong or weak. You would go to a stock like LB. Actually, it does fit the criteria. So we're actually inside candlestick and well offered on the weekly chart of LB. So if that continues tomorrow and breaks, and again, not the best example, it's a $9 stock. It's really more about the chart setup and reading the tape. We would be looking for that to follow through should the market break to the downside in a stock that's already weak. So that's how we're setting up the week, and that's how we're setting up our if-then scenarios. And I pulled it back in because I didn't want to be misquoted. What I'm telling you is there's two different scenarios if we break out to the upside or to the downside. So Corey, thank you for the question. We're just going to get into a few stocks that meet the criteria for longs for tomorrow. CBNS actually brought this up here in Cadence Designs. We actually got up to this resistance level again, so I'm setting an alert tomorrow for it to trigger above this level, which would be around 78. I have an alert set for 78. I don't remember the exact number. That's probably what it was, 78, 78.25. If it gets above that level and stays there, we'll start to look to initiate a position. More likely, though, it's going to go above that level, pause, and go into the tracking journal for the next trade. On the other side of the market, though, COG, I was looking for it to actually have an inside candlestick. We had a bearish U-turn, well offered. I'm actually looking for one more day to the downside and then look for a spot to bid for COG. Don't like it yet. If we drew an old-fashioned trend line, we'd actually be looking for it to pull all the way back to 1950, which is another $1.25. Could possibly happen. Today's trading range from low to high was 21.56. It was about $1, so it's actually possible. My point here is this: if I want to be long this stock, but I want it to push down one more day before I get long, I want to get a better price so that there's an expansion between my entry price and the potential profit target, which would end up being new highs. I want to get into a couple of stocks that made the list. One of the stocks that was the most interesting to me, and quite honestly the most tradable, Shake Shack, actually, which had bad news the last couple of days, but the whole government giving the money back, which they took it and then they gave it back. So the bad news became good news. I like the fact that it broke through here. We're now actually well bid 3 days in a row. I don't like the fact that it closed off the highs, but I do like the fact that it stayed above 48. So as long as it's above 48, and especially if it's above yesterday's close, meaning today, Wednesday into Thursday, I like it. You can see it's got plenty of room to go. Obviously, the industry is being hit very hard, but a lot of these companies are doing curbside delivery, curbside pickup or delivery. So something to keep an eye on. J&J actually, ironically, continues just chugging higher, and you can see it's been breaking out of 52-week highs. So I like this long. I do not like this as a day trade at all. Too many melted candles, doesn't have enough volatility. This is also going into my tracking journal because you could actually see it just had a really nice move from roughly 138 to 154, $16 move or so. I'm looking for this to pause in the 152, 154 area and then make the next move. So it's tracking journal. Lulu, we discussed quite a bit in the room today. I'll show you why, actually. It actually had a really nice move out of the gate, did not follow through at all. If you remember yesterday, it came in yesterday looking for it to open lower today. It didn't, kind of went sideways and actually inside the opening range the entire day. Now it's an inside candlestick. I actually am looking for it to trade higher. If it opens up and trades to the downside, I'm letting it go. Again, my bias is to the long side, so I'm only looking for this to break out to the upside and look for that trade. Microsoft, a very, very similar play, but this one's a lot more juicy because it actually closed near the highs. Almost an inside candlestick, very weak, well bid, but definitely well bid. Traded up above, which kind of negated yesterday's entire down move. Again, this was another stock I was looking for it to open lower and trade up to where it actually traded now. So what I'm looking for in Microsoft is for it to take out the 2-day high and look to get long there as well. Some other stocks that are interesting that are in my list and always in my watch list. Tesla, actually an inside candlestick. I do like the fact that it's pausing here with the rest of the market. Match.com, actually, for those of you staying home and looking for love. I do like the fact that it's holding up here as well. It sold off, bounced back really quickly. If you're not in this stock yet, it does have some room up to 92. Man, only a $10 move. Again, it doesn't stink, but it has paused now for 5 days with the rest of the market. A new buy stop would be around, for me, around 81.50. We just talked about all the gold stocks having a really good day. That I'm expecting them to continue. And actually, I'm going to look at these on the weekly charts because these are really more swing trades than they are. You can get a much better picture. So you got AU, GOLD. Jerry Sarmiento had a nice trade in this today. Jerry, you're making some really good calls this week, by the way, in the coaching. Also on the weekly chart looks very good. AEM as well. You can see now well bid 1, 2, 3, 4, 5 weeks in a row. A little different here. It's not taking out the highs like the other ones did, and also 5 weeks of buying. I would not be looking to bid this again heading into next week. As a matter of fact, if I got 2 more days on the daily charts heading up into the resistance, I personally would be exiting into that resistance, looking for it to pause. WPM was also in our game plan today, and you can see having another nice week as well. And again, keeping with the same theory, but this is a little different. We had one inside, these are all green, but then we had an inside week and 3 weeks of well bid. So I'm looking for 1 more week. Again, on the daily charts, we're looking to stay long there as well. PayPal was in yesterday's game plan. Well bid week again, but you can see up here this 120 level is a little bit tough. So we're looking at the daily chart of PayPal. Getting a little zoom it in a little bit. 120 is resistance. If you're actually long from this push here where it gapped, maybe 1 more day too. I'm going to show you a little bit more succinct there. That's why I'm saying that. And again, if you're new to the videos, I look at the real price that price action's having a hard time getting above and staying. It's not this garbage up here where it traded once. That's not the real level. This is the level. We're having a hard time getting through this level and staying there. Got up here and failed, got up here and failed, got up here and failed. This is the real level, not all the way up here. Last but not least is Newmont, also having a good day, gapping through. What I like about this one is that it had, we discussed this one a lot recently. We had inside candlesticks, breakout, nice pause, and another breakout again. I like this to follow through. But again, a lot of these gold stocks are coming up to 4th or 5th week in a row of buying. And again, you read the reminiscent stock, it's never too high and never too low, but these stocks do reach a saturation point where they tend to take a break, which is what we saw in the overall market coming into today. So going into tomorrow, I like the long a lot better than the short. If we do break out of this consolidation and the week goes positive and we take out the highs from last week, I'm going to be a little bit more aggressive with share size, a little more aggressive with how long I hold, and a little bit more aggressive with how many positions. If we should happen to break the 4-week uptrend to the downside where we remain below the opening price and take out last week's lows, look for stocks that you are already short, stocks that are already in downtrends, maybe some oil stocks, some bank stocks. And then those would be the leading stocks to short. A lot of the other stocks are strong. They're not the best short sale candidates. If you're trading the ETFs, this is the first time you're breaking out to the downside. Again, I would not be as aggressive if you're short selling based on the shorter time frame because you don't have a lot of price history behind the tape to tell you those are aggressive shorts. Just to give a little thought process on trading intraday right now, the thought process is I want to be long, and I'm only looking for the best trades on the long side, but the daily charts and specifically the intraday, a little more aggressive micro trades, a little bit tougher because we're kind of going sideways for a while and you feel like you're losing a grip on the tape. The key is to be patient because you don't want to throw that money away because you're bored. Wait for good opportunities. Wait for a little bit of price action back and forth so you have a spot to manage risk and a spot to where you can say, if it goes up there, that's where I'm looking to see where the next pause would be to either add or exit that position. So big deal tomorrow with jobless claims. Be safe at home. Hope everybody's wearing a mask or whatever they need to be. Be safe, self-quarantine, do the right thing, and we'll get out of all of this together. But most important tomorrow, be profitable, be disciplined, and let's have a good final 2 days of the week. So thank you so much for watching this. I will speak to you soon.